Hello, this is Vance, and this is Monday, January the 23rd, 2017. And these are the CL trades for today using the slow hand method for price action. Well, overnight we had a fairly, I'd say, dramatic sell-off, I suppose. Continuation from where kind of retracement from what happened on Friday. But price opened at 53.47, traded down to just before the open. Now, the open was right around here. It's 9 o'clock right here. And as you can see, price traded down by the time the open actually occurred. By the time the range was basically from 53.47 and was right about here. 9 o'clock, it was 52.21. So we're looking at $1.20, somewhere in that neighborhood. But we had this turnaround, which occurred really at about 6 a.m. So price had traded pretty much unbroken down. I mean, it was back and forth, obviously. It pulls back, then it continues on this downward trend. Now, the problem is that what was I thinking first thing this morning when I sat down here? Now, I didn't get here till just before 9 o'clock. It was probably 8:30 or so. You take a trade in this area, for instance. Well, my obviously concern, I mean, the first thought that I have is that price is traded down overnight. And is it continue to sell off, especially when we're getting close to the open? Now, New York opens at 9 a.m. Eastern Standard Time, and so we're within a half an hour of that open. And up until that time, from about 7 o'clock, we have these bars that are forming, and we have a really pretty tight, slowly developing channel. This is 15 ticks. And so either way, I mean, how do you actually kind of look at this? You know, where's your target? For instance, if you're looking at trading, and first of all, to kind of give you an idea of what I look for as when I'm trading, I mentioned this to you in the past, is that the first step of looking at trading is to look where the entry is going to be. What is your entry? Second entry long? Is it a breakout pullback long, breakout pullback short? Is it a limit order, whatever it's going to be? So you look at the entry. That's the first thing. If you're looking at second entry, you want to see two pullbacks to an area of resistance if you're going short. So that's the first thing. Second thing is to look at where's your stop going to be. Now, I use a 15-tick stop box, and I use 15 ticks for a reason. And I've talked about this reason a few videos ago with reference to what I see as how far the CL runs during regular trading hours before it pulled back 10 ticks, which came out to be 30 ticks. I'll get into that in a second. So that's why I use 15 ticks. That way, if it's a 30-tick run on the CL wherever you get in, even if it's a 50% trade, you've got 15 ticks in either direction. That's the way I look at it. Second of all, you look at your target. So if the target is 15 ticks, that's when my target's going to be at 15 ticks. First target, because it's right in the middle of that rotation, that 30-tick rotation. And lastly, I look at my risk and reward. And the risk and reward says that if I'm into a trade, and let's say I'm trading one lot, that means, and it's a one-to-one position, that trade I expect it to go to my 15-tick target before it hits my 15-tick stop. And the only way I can do that is that if my potential target, is within a reasonable degree of probability of being hit. Now, what do I mean by that? I mean that usually it means that it's an area of previous support or resistance that I'm looking to target, or an area where there's been a strong move to the downside that I believe is it's more of a momentum trade. So if we've already had a strong move down, I expect there may be a second leg. Does this look like a strong move? Does this area like here? Now, I've already talked about the fact that this area right here, and let me just kind of mark this off. In the overnight, we had a fairly strong move down to this area, right to here. Okay. Now, this was pretty strong, a strong move, but again, it's the overnight, which means that there's a lot less volume in the overnight. Yes, you have 800 tick bars, but the contracts, there's not as many contracts. This is over an extended period of time. We're talking about from yesterday at 6 p.m. to this morning. This is over 12 hours. So this movement took place over a 12-hour period of time right here. I don't trade in the overnight sessions, like unless it's a swing trade, but that's a different story. I trade during regular trading hours. I want to trade when there's volume in, and typically right at the open. Asia's open, Europe is open, and that's when New York opens, and that's when you get most of the movement is during the regular trading hours. So that's the first thing I'm going to be looking at. Now, it doesn't mean that I don't take trades in the overnight or before the open. I do. Like, so we call it the pre-market. Let's say an hour before the market actually opens is a pre-market. But don't make it a rule of being there. I want to be here for the open at 9 o'clock, but I'm not necessarily here at 8:30 or 8 o'clock for any of that pre-market stuff. It just so happens that this morning I wasn't here. I was here just after 8:30, so I was just kind of looking at things and trying to figure out where it's going. And I saw this. I was seeing this movement. Now, from this perspective, this 15-tick movement down here had me thinking that, number one, I'm going to wait for the open to see what's going to happen here. There's no sense in me taking a trade in here, from my mind, because it's a tight range. In order to catch a 15-tick move, either at the top or the bottom, I have to be extremely precise. So that means that if I'm buying down here, I have to limit in so that it will make it to the other side. If I'm selling, I have to sell here. And in other words, let's say that I'm here, this is 8 o'clock right here. It means that the price, depending on where, after I get a good signal bar, I likely have to break the low of the day in order for me to get my first target. It's something I don't necessarily want to do unless there's some really good movement during the overnight session. Now, we did move down, but it took 12 hours to grind to this price. And so, just in the last hour, like in the last couple hours, from 6 o'clock, prices moved up here pretty strongly. I mean, there wasn't a lot of back bars here. It moved up, and then sellers kind of got moderate control to bring price down, but it's grinding down here. It's not moving quickly. If that's the case, and if I've got a 15-tick target, what does that mean? Well, if I look at this 15-tick box here, look at the back and forth movement within this little box that I've drawn up here. Here, even if I caught this trade right at the bottom, yes, I would get my 15 ticks off, but I had to limit in right at the bottom of this particular bar. Is that a possibility? Not necessarily. So I'd have to realistically limit sell near these tops. And where could it, like here? Yeah, maybe. Where was it going to land? Get my first target off? Well, right at this bottom here. But I have to be extremely precise in order for us to do that. There's not a lot of margin for error. So would I go short here? Well, I'm not saying that I wouldn't, but certainly there wasn't a really decent setup for me to do that, particularly so close to the open. So we get to the open. Price opens right here. This is 901, right at this area. So price shoots up here a little bit, not a lot, to 15 ticks. Now, when they open up, it goes up, and then sellers take over and drive price down. So right at this area, let's see, we can say that, is there a way to get in? Again, we've got this channel down here. Can I sell at this area on this bar? Well, I could, and had I done that, I would have gotten my 15 ticks off, but my target has to be below the low of the day in order for me to get off. Now, if it was here, I might be more inclined or limit in from this area. But again, it's a really tight range. And so there's not a lot of room. Now, if I'm trading 10 ticks, I don't trade 10 ticks. I trade 15 ticks. If I'm trading 10 ticks, you can make the argument that, yes, you would get that off. Go for a short target. I don't do that. I want to make sure that I want to see what my target is based on my 15 ticks, 30 ticks, 10 tick pullback issue, because that's what I do on the slow hand method for price action on the 800 tick chart. It all fits together. So down at the bottom of this channel, we break the low. This is at 9 o'clock. Okay, so you're looking at it right here. This is 9:15. The other thing is a time issue. How long does this take to move up? Well, let's backtrack here. This opens at 9 o'clock, and we have this, it busts up here and moves up fairly quickly at 9 o'clock, 15 ticks. And I'll just show you this. I'm just explaining this one in particular. So this is 9 o'clock right here on this bar right here. And 9:01, 13, 9:01, 36. So 30 seconds, it moves up 20-something ticks. Let's say from 52.27 to 52.49. 22 ticks, it takes 30 seconds to move up. Now price starts to come down. So we've got these bars that are painted right here. So how long does it take it to go down? So we see it went 22 ticks in less than 30 seconds. Now we're at 9:02, or just over 30 seconds. Price starts to head back down, and from 9:02 to where that bottom is right here is 9:16. To go the same direction in the opposite direction, it takes 12 minutes. Well, pardon me, 14 minutes. So 30 seconds to go up, 14 minutes to come down to this area. All right, 14 minutes. Now, what does that tell you? Does that tell you anything? It tells me that right at the open, there are buyers that are stepping in, and each of these bars is 800 ticks, which means roughly 800 transactions. So these 800 transactions took less than 30 seconds to take price up plus 22 ticks. Over the ensuing 14 minutes, we see 1, 2, 3, 4, 5, 6, 7, 8 bars. So 6,400 ticks to take price down an extra 2 ticks. Okay? So 6,400 ticks to take it this way. 1,600 roughly, well, maybe let's say 2,400 to take it up, 6,400 to take it down. For every buyer, there's a seller. For every seller, there's a buyer. So for every seller, there's a buyer. And if these bars are 800 transactions each, these sellers are trying to take price down, but there are sellers there are buyers stepping in, absorbing those contracts at every point in time. Who is more likely to give it up? And at what point does that happen? So as we see, these bars are all red, 6,400, and we see the first green bar right here. We see a second doji, which is nondescript. We see another doji, which is nondescript. Can't take it down any further. So now we've got 21 is the bottom, is the low. Doesn't take it down any further. Doesn't take it down any further. Just a little bit higher. Now, is this a place that you would step in? The thing is that if you step in here, where's your target? Well, your target's right here. Okay? But below this top, right here, we're near the bottom. Where's your stop? Your stop is below the overnight low. And now we've had these bars where prices can't move. Now, if price can't go down any further, what's the other alternative? It's got to go up. Prices got to go higher. It took 6,400 bars to take it to this area, or 6,400 ticks to take it down here. It's taken another 3,200 ticks, and it hasn't gone down any further. To my mind, that's the place to step in. Okay? At least to this area, because my target can get off, and what happens? Well, you can see that right away, price started to move up in the other direction. Okay? How far and how long did it go? Now, this is my next step. This pricing here, this move, and this is my 30 tick bar. Remember I talked about earlier about 30 ticks being about the amount of time that a price can move? Well, if we look at when price started to move up, this is a little bit more than 30 ticks before it hits a 10 tick pullback. So we had this move, 10 ticks is pulled back here. Now we're at these double tops where this first move actually started. We got double tops here, arguably a triple top. Price moves up here fairly rapidly. And how rapidly? Let's take a look at the timing. If this is the move, it starts here at 9:23. By the time it gets to here, it's 9:38. So let's say that this 30 tick move took 9 minutes to go plus 30 ticks. Over this area, now price is starting to, this is the 10 tick pullback. Is it going to go any higher? From here to this area, we're looking at 38. This is 54. So this is 16 minutes and price hasn't moved up. Is price going to go up again? Is it going to be moving up in that direction? How long does it take? Well, we know that if the average move in the CL is anywhere from, let's say 7 to 10 minutes to go 30 ticks, and now we've got 14 minutes and it hasn't moved up, either price is going to come back down, rotate, or price is going to go higher. And so that's the way I look at it. Now, price does move its way up. Is it going to continue to go up? Now we have between here. Now let's take a look at our stop box. That's the other thing. 15 ticks. Oops, I messed that up. Let's take our stop box. No, we have 15 ticks here, right? What did I tell you about the 15 ticks just earlier? You have to sell at the top or you have to buy at the bottom. Now, with this strong move up off the bottom, 30 ticks, and even though it's moving sideways like this, do you think it's going to rotate down or is it going to rotate up? I don't know, one way or the other. If I am selling, I want to sell right here at the outside somewhere. If I'm buying, I want to buy down here as long as I get the setup. So what do I believe? Do I believe it's going higher? Well, let's take a look. If you were to sell here, you would have got your 15 ticks off because it's really close, but that's a tough trade to take. That's why I marked it in green. You know, you want to sell, you have to limit sell right at these tops in order to get in. Now, it would have worked, and as you can see, price is rotating down. Now we have these other bars that are overlapping. Moves down further. And here, why did I look at going? Now, remember, the 30 ticks, where's the 30 ticks? 30 tick box before it starts to rotate. Oh, look at this. That's roughly 30 ticks if you ask me. How long did it take to move that way? Well, here's 11, this is 10:08. And now we're at 10:40. 30 minutes to get down to this new low. Does that tell you that price is going to go down any faster? Or does it tell you that maybe that we're near the bottom, we're near what we call support? Well, tells me that we're near support. That's what at least my thinking was. And so now we're at 10:30, turn 33. Now price started to rotate back up. And where does it go? Take a look at this bar chart. Yeah, look at this. Here we go, 30 ticks. See what I'm saying? Now, anytime price backs up like this, you want to be looking at going long. Once you establish this area, and if I just kind of scroll forward here, you can see that it's about a 30 tick range, either up or down. Now, why would I be more interested in the up part? It's because the time for price to rotate down was taking so much longer than it was going to go up. Because look at this move here, 10:40, 10:50, 10 minutes to go this far. Pulls back, 10:55 to 11 o'clock, 5 minutes to go this way. So in total, 10:40 to 11 o'clock, 20 minutes to rotate up here this way. And it was more than, this was close to 40 ticks. Okay. Whereas here, price takes this 10:08 takes 30 minutes to rotate down here. And you can see the pulling back in this area. It's kind of pulling back. Now, it's not 100%. It doesn't mean that price, when we see that, it just tells me that the likelihood of price may be going up considering that it's finding the bottom, especially in the regular trading hours. The last thing, how many of these trades do you need? I mean, if you're looking at taking every single trade on every single bar, you don't need that. All you need is how many trades? One? One trade in this direction? Two? Two trades total? If you took one or two trades and they are the very best setups using this type of reasoning, and you're finished by 11 o'clock, and this is 11 o'clock right here. So from 9 o'clock to 11 o'clock, this 2-hour window, you just take the two trades in here. How much more do you need? You don't need anything more. In fact, if you want to make more money, just trade more contracts. You don't have to look for longer moves. You don't have to be in the market for it to move like $3 or $4. All you need is to trade more contracts on the shorter term and to catch this move. So theoretically, if you got a 923 and you traded 10 contracts for that move, you could be finished in a half an hour. That's really what it's based on, more than anything else. Now, I hope I made sense. So you can see this. The 15 tick rotation, like you're looking at 30 ticks for the moves. And this is, I use this, the reason I use these bars, I use this, I thought it was pretty interesting when I used this the first time a few weeks ago, is just to show you visibly. I know where it is. I've seen this many times, but just to show you, this is a 30 tick move. Here's a 30 tick rotation down. Look at the overlap here where price is kind of stalled. Now, this is a second entry long, but it's a second entry long that took almost 30 minutes to develop. You go long on this. That's the last bar in the range. I mean, who's to say it can't come back down? So yes, you could have taken it. Yes, you could limit it in. Yet would you have gotten why wouldn't you consider doing that? Well, if I limit in here, my stop is down here, but I have to break this daily high and it go up in order for me to get my first contract off. I don't know if I really want to do that. This one is this is down. Now, yes, you could sell here, but look at how long it's taking to develop. You've got this back and forth here. It does eventually work out, but do you get shaken out in this trade right at this level when it goes 10 ticks and then pulls back? That's the other question. I was really more along the lines of looking for the longs at this point because this move here was developing a lot faster. And at the tops, we had this, it wasn't really moving up. And when it did finally move down, it was reluctantly moving down. That's not to say that somebody could step in and drive price down to this level. That can happen. I mean, you can't project all of that. But in the short term, I think that on this level, you can actually see the reasoning behind drawing the lines like this, areas of support and resistance, and taking into consideration the things that you don't see. You don't see the 30-tick rotation. That's done from a time study. You don't see the pullbacks of 10 ticks unless you really are observant of what's developing on the sheet in front of you. And it has to be following the 800-tick chart. Okay? So that's what I wanted to explain to you. Again, here's 9 o'clock. This is the time that come in, and all you really need is 2 trades. And hopefully that makes a lot of sense to you. If it doesn't, well, ask me some questions. Apart from that, I think it's pretty well thought out as far as I'm concerned, and it's pretty clear to me. If it's not clear to you, then maybe you just need a little bit more time with it. Anyway, that's all for now. This is Vance. Thanks for watching. Bye for now.